Hello and welcome to another update video about Solana. Solana is broken out of this triangle to the downside. However, it hasn't really broken out of the range yet. So just by taking this ascending trend line out, yes, it shows weakness, but it hasn't broken the uptrend really. Yeah. So all I've done for now is to move on the wave E of the triangle. So it could technically still be an Elliott wave triangle, and we can also discuss different options of labeling this triangle. I mean, it's certainly possible that the D wave itself of the triangle was a triangle. That happens as well. So there are different ways of labeling this. I wouldn't get too hung up on that. Important is, and it continues to be important, that as long as we're holding this support area, I think we are still in this fourth wave, and really only if we lose this support area, which is based on Fibonacci supports. So for this fourth wave here, the ideal targets are the 38.2 retracement at 21.60 and the 50% retracement around $20.50. These are the relevant supports for this fourth wave, and going below $20.50 would indicate that we are in a deeper correction. We would then, and that would then become my expectation, if we have already topped here, which I currently don't expect yet, but of course also I don't have a crystal ball, so we certainly have another chance to find support at one of these support levels, 21.60 and 20.50 or 20.60. So if we find support here, we can certainly still put in this fifth wave, but I already warned you in the last video that it could very well be that the top is already in. I mean, we had two amazing entry points here, actually three. This one was profitable and still is as well. But now at some point, you're getting towards the end of such a rally. Again, I still don't think it's over yet. There's a good chance to still dip into this deeper support area. And if we break below it, I will also pay particular attention to it, because just by breaking this support area, it doesn't necessarily mean we have to go down all the way into this area in a wave 2. It could be that we have a slightly different setup. Maybe we have here another 1-2 setup, yeah. So I will always mention for you the relevant support levels for different scenarios, and then you can decide if you want to take the trade. They are not necessarily all high probability trades. I mean, here, for example, if we get into this region, I think that would be quite a decent area to scale in for a possible wave 5 with a very, very low risk, because the stop loss can be set quite tight below the 50% retracement. I think the next high probability trade would come in this area, because this is the larger support area, and if this is the beginning of the bull run, which I currently don't expect yet, but this is only my bias, we can only trade and analyze what we see in the charts. If we come back into this area, and I've currently labeled it as if the bull run is already running, but if we get into this area and find an entry here, and we are taking off in a third wave, and it might take us to $35-40 in this third wave, then we might never get back to this price level. That's why it's such an important entry point here, this wave 2. That would be a high probability trade in terms of, high probability in terms of we have 5 waves up. So if we see that we come down in 3 waves, it would be a great entry. Don't say it will work out, not 100% guaranteed, but it's all probabilities, and also low risk, because you have come down really, really a lot, and we're really close to support. This is also based on Fibonacci support levels here, between the 78.6 retracement and the 50%, between 1176 and 1674. The way I normally handle it is to scale in at these Fib levels, lowest position size at the top, larger position size lower to get the best price, knowing that the lowest one might not be triggered, but that's fine as well. At least you've got a foot in the door, and you can always scale up in the subwaves of the wave 3. And this would be interesting. And this is sort of the deep support area. And if we break it, we will probably make a new low anyway. But it's sort of areas to scale in, but certainly use a stop loss as well. We are very, very, very early. If this is the beginning of the bull run, we are very, very early. And in these early days, it's of course not an established trend yet on the higher time frame. So it's very much at risk of still breaking down. So yeah, it's very interesting what's going to happen here now next. Again, at the moment, this could still be a triangle, but it could either easily be, and the subwaves aren't so important here now, it could easily just be an A wave overshooting, overshooting B wave, and now we're coming down in the C wave. Yeah, so that's also possible. But then we have a chance to hold still that $20.60 level. So I can't uphold the triangle count really anymore if we drop below around about $22. Until then, we can still sort of uphold it, and it could be something like that. Yeah, this is possible. It's not a nice triangle anyway because of these fake outs, but certainly a bit of a range now. So yeah, I'm going to observe that, keep you updated. Bear in mind there will be some volatility later today due to the PPI data that will be released in the US, so that might trigger some volatility and might push us into a certain direction. At the moment we are just consolidating in a range, which normally suggests trend continuation to the upside. Okay, that's my update about Solana. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.